Hey everybody, Dow Jones Dave here, and we're going to take a look at what's the problem with the market. So why is the market having so much trouble here? Well, first of all, it's earnings. What this is all but four, which I haven't finished yet, of the Dow Industrials components stocks, and what the stream looks like from last fiscal year to the 52 weeks to estimates for the end of the year for each of these companies. 52-week earnings that have questionable relationships to the numbers on either side of them are in red. What's the questionable relationship? Well, here we've got 1301, 1264, 1108. These should be going up, but they're going down. 1264 is less than last fiscal year of 1301 and more than consensus estimates for this year. So these earnings are in decline. And here we're red because it's less than 52-week earnings, and although consensus for this year is higher than that, it's barely higher, and this number is still of concern because it's less than last fiscal year. The green in this column simply means that over the week estimates were upgraded. And the red means estimates were taken down for estimate column. Here it just means a bad relationship between these numbers. So let's see, 718, 764, 718, 605. Minus 60, minus 564. Estimated to improve to minus 207 at the end of the year, but still a lot less than minus 60. 1491, well, this is higher, but this is lower, so we get a red. So that's how this works. Now, look how many red numbers there are. Right now, we've got 26 stocks. 4 of them don't have this type of earnings issue with earnings in decline, estimated to be in decline till the end of the fiscal years for the various companies. So that's one thing that's dumping on the stocks. Here we have, I haven't done this, 1105, but I marked the fiscal year in red. This means both numbers here are fiscal years. Last fiscal year is the 52-week current earnings. So you take this, 1185, 1103, 377, 374, 730 to 640, down, 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 down. So that's one of the problems, and that to me is the major problem. But there's another big problem too, and that is Treasury bonds. Right now, normal spread between the Dow Industrials dividend yield and 30-year Treasuries is around 20 to 25%. So if the Dow was yielding 1%, a 30-year Treasury would normally be about 1.2 to 1.25%, which is about 25% more. Right now, Treasury yields are 2 full percentage points above the Dow Industrials. That's huge. That's big, way, way, way more than the average 25%. It's like 100%. And that's dragging on the Dow because those returns attract investors, because they're better than the Dow and better than stocks. So that's what's been going on. You notice right here, though, we've got a trend break. And this is on a 1-hour chart, so this is a couple days, and we've got a pattern and a trend break. So I'm not going to sell my positions yet, even though this looks pretty on. Any break below here and I'm out and short with whatever I have left. Remember, I bought long right in here yesterday, so I'm down and still down and holding, and not sure if I want to stay in. So I'll be watching this closely. If bonds decline, then stocks are going to rally. So those are the things that are bothering the market right now. Plus seasonality. We're getting into the point where seasonally we have a correction. And being long right now is really risky. But I'm already long and the market seems to have stabilized. It is off the trend so far, and maybe forming a shallower trend. And it did that before and it didn't help. But we still got a big upswing. Are we going to get another test up here? That's what I'm wondering. And if bonds take a dump, which looks like they might, we'll get a rally. For people all concerned with the dollar, this is what you need to be concerned with. Bonds, overall. They're right now they're way attractive compared to stocks, especially if you look at this. Red, all the way down the line, red. I'm sure the last four are going to be the same way. So the Dow components are all in earnings decline. Not all of them, but it's pretty clear. A lot of red, not very much regular, not much black. So anyway, that's what's having trouble. That's what the market's having problems with. And hopefully the problem will be lessened by this decline, this trend break and decline. Now we know this works, it's just how far will it work? That's the one big bugaboo yesterday, is that we could never pull out of this and get into a bona fide uptrend for the day. So even though the downtrends all disappeared, they came back later in the day. So anyway, this is Dow Jones Dave with my take on what is troubling the markets.